Hello traders and welcome to another video review. Today is Friday, July 21st, 2023. Let's take a look at the Forex economic calendar for today. What do we have here? The first thing is the core retail sales. This retail sales and core retail sales from the UK are scheduled for release at 8 o'clock, and as you can see, the market participants expect a different bunch of the results from the retail sales, so it's better to wait for the actual reading. During the New York session, we got again core retail sales, manufacturing sales, and retail sales data from the Canada scheduled for release at 2:30, and then we got some US Baker Hughes oil rig count data from the US. Those data are scheduled for release at 7 p.m. So no very important data for today, just the retail sales and core retail sales data from the UK and from the Canada. So we will definitely take a look at the British pound, and then of course we will take a look at the technical side of the Canadian dollar. Let's start with British pound. For our chart of the British pound is extending the dips below the 50% of the Fibonacci retracement of this whole move to the upside. So we bounced towards the level of 1.2963. Then we had some kind of a pin bar here at the 4-hour chart, and then confirmation and extension to the downside. We've been testing this technical support from the June 16, 2023, located at the level of 1.2847. Local low was made a little bit lower, 1.2839, so it's kind of a almost 10 pips lower, and then we have the bounce again to the upside. Please notice that we are trading way below 50 periods moving average, and right now we are trading below the 100 periods moving average on the 4-hour chart. Nevertheless, we hit the extremely oversold market conditions, so there's supposed to be some kind of a bounce here from this extremely oversold market conditions. Right now we hit the level of 39 so far. What's the next target for the bears in case of the this movement to the downside is getting stronger? So the next target is 61% of the Fibonacci retracement. This target is located at the level of 1.2802, and that's the last important strong technical target for the bears, because it's one of the three most important Fibonacci retracement on any market: 38, 50, and 61%. So please keep an eye on this. On this market, it looks like the bears just want to do some sort of the bounce for now, just a slight bounce to the upside, and then of course the extension might go lower. However, the chances are very limited because we hit the extremely oversold market conditions already on a 4-hour chart, of course. Okay, so that was the British pound. Let's take a look at the US dollar to the Canadian dollar. What is going on here? We've been looking at the US dollar to the Canadian dollar recently. We know that the main trend, long-term trend, is down on this asset. So we got this, let's say, technical resistance 1.3386, and of course we got this technical support yearly low 1.3091. So this is the range right now, which is important from the technical point of view. If we take again our Fibonacci retracement tool, we can see that the market is apparently trying to of course retrace something. Okay, let me just adjust this this tool so we can do it correctly. So that's the low, okay, and from the highs, there you go. So what do we have here? We have the 50% retracement, and please take a look here that we hit this retracement almost to the pip. Yes, there you go, the black one, of course. And then of course the market what retraced to the downside. So first, very nice attempt to bounce from the extremely oversold market conditions, and then we went lower. We might even notice this level here, the low after the retracement was hit, 1.3118, and now we are back on the track to go higher. Okay, the local high was made at 1.3191. So this is the level we will of the 50% of the Fibonacci retracement. Let me just place the 61% of the Fibonacci retracement, which is here, 1.3274. This is the next target for bulls, and only if this target is violated, then we can talk about another leg, maybe challenging the swing high at 1.3387, maybe, just maybe. But if there is another rejection of 50 or 61% of the Fibonacci retracement, then of course, if the sell-off will get aggressive, please keep an eye on this local high 1.3116, because if it's challenged, then we can go to another level, which is the key level here, technical support at 1.3090. So that's the outlook for the US dollar to the Canadian dollar. Because we have some data from the crude oil, let's take a look at the oil as well. So very nice development for bulls, of course, on the crude oil. We've broken above this level of 75, so we finally broken out of the range. Okay, so the range we stayed for weeks, as far as I remember, and then you have this range settled right now. You got the technical support at 73.84. You got this technical support at 75, and we are now trading above the 100 periods moving average, and of course we are just challenging the 50 periods moving average. So local high during this very nice rally towards the extremely overbought market conditions was set at 77.32, so that's way above $75 per barrel. Then we have some kind of a correction. We've been testing the lower levels, and now we are bouncing higher. The situation here is quite clear because the momentum is strong. It's maybe not, it's positive, it's not that strong, but it's 55 points, so it's still above the level of 50. So the bulls are in control of the market whatsoever. We got a local technical resistance located at 76.96. We got the local technical support, intraday technical support, located at 74.57, and it looks like the bulls are trying to get away from this 50 periods moving average to extend the movement to the upside, right? What can be developing here on this market? Let me just suggest some sort of the technical pattern, because it looks like we might have some sort of the triangle pattern in progress, okay, in developing. So something like this maybe is taking place. Okay, so this is maybe some kind of a technical pattern like here, or maybe here. Right, so if we label this pattern, how many legs we are missing? Elliott triangle is okay. So we got, let's say, the wave A, we got the wave B, we might have wave C, we need wave D and E, and then we are ready to move higher. So the triangle is a trend continuation pattern. What is the trend here? It looks like it's an uptrend. So uptrend, big correction in a form of triangle uptrend. That's the situation on the crude oil, and that's the scenario for the coming hours and of course next few days. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.